Hello, everyone, and welcome to today's live stream talking about the market with myself, Greta Wall, and Derrick Oldensmith. Derrick is, of course, a professional trader with T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Derrick, thanks again for doing this with me this week. How is your trading going today?
Thanks for having me. Good to see you again. Trading's going well today.
Mhm.
We had a decent gap up this morning after a nice little pullback in the second half of last week.
Mhm.
The gap up actually made I think an opening game plan a little bit tricky today. So I told the team we should probably be a little bit patient, see how this gap digests a little bit. But big picture, I'm still looking for continued rotation on the market. So the correction that we had the second half of the last week was very much needed for the Russell 2000 after having such a big move, and it's exactly what we were looking for, a pullback into this 215, 218 area in the IWM. And at the same time, the Qs, which led that sell-off, became pretty extended to the downside. So a bounce back higher in the Qs for the moment is something that I am looking to short. So I was short the Qs most of the morning this morning. I covered that position at about 11:30 or so. I would anticipate that if we can bounce a bit further, I'll put that reshort on. And at the same time, I'm looking to see if the Russell can pivot up just for continued rotation, a continuation of what we saw starting just a little bit over a week ago.
Mhm.
This is a big week just because we've got some major economic numbers. We've got GDP that's going to be coming out this week. We've got the Fed's favored inflation gauge, I believe, coming out on Friday. We're really starting to kick off earnings season in earnest this week. So there is a lot of moving parts underneath the surface. And
Mhm.
unless there's any very specific surprises, I'm still looking for the rotation trade to continue.
Mhm. All right, we are going to talk about all of those things, starting with those big tech earnings that we are getting starting tomorrow. A quick look, these are the positions that Derrick is holding as of 12:28 p.m. Eastern time. Just a disclosure here for anything he discusses, this is where he is currently holding positions. All right, so let's talk about the first of those mega cap tech names that's in focus. That's going to be Tesla, coming up tomorrow after the close, typically pretty close to the bell. So look at the chart as of earlier this morning. The starting point of this chart is earnings report, the last earnings report. So this is what the chart has done since the last earnings report. So Derrick, what are you looking at in Tesla heading into this report? Kind of what do you expect maybe the stock to do afterward? What is maybe the street's focus? Not as much on sales, but maybe more on the technology they're developing, things like that. And if you want to talk about any charts, you can, of course, share your screen and you can analyze those for us as you discuss. So, Tesla before earnings. What are
Sure.
your
So
thoughts?
Tesla is definitely a tricky one because it's been the big underperformer of the Magnificent Seven, of the largest market cap companies that are out there, because it's pretty unique from those ones. This is much more of a growth story than Apple or Microsoft, that are all about the massive amounts of cash that they have and the products that they create. Tesla is still an expensive stock fundamentally because market participants are pricing a lot in for Tesla's future, and it's to be seen whether or not Tesla can fully deliver on that or not. So it's an interesting one because on the one hand, I'm expecting Mag 7 stocks to struggle to continue into this earnings season, but Tesla is, like I just said, is kind of a unique one. It's more of a growth stock, which in some ways could be a little bit more related to like the IWM, even though it's not a small or a mid cap, than Nvidia or Apple or Microsoft. So I actually expect Tesla to be able to continue to benefit from the rotation trade that I'm looking for. But it really matters on whether or not the fundamentals are going to continue to deteriorate, because there have been a lot of headwinds that this company has been facing as far as their sales growth of their vehicles. The Cybertruck, it doesn't sound like, is doing tremendously well. I just was hearing over the weekend that Cybertrucks were initially selling for like $200,000, and now that price has deteriorated to like $115,000, $117,000 in a very short period of time. So you wonder where that's actually going to settle out, and that's just because after some initial excitement, the demand for that truck is just not there. So a lot of Tesla also depends on whether or not they can deliver on this AI story, which Elon Musk has been trying to hype up. And I'm just not convinced. So for me, this is a confusing one because, again, just to sum it up, I think it should benefit from some of the rotation that I'm expecting to see. But I actually think Tesla's going to have continuously deteriorating fundamentals, which obviously can apply pressure to the market. With that said, I always want to say I don't really take bets too often on stocks and earnings reports because I think it's a gamble. There's no way to ever know exactly what the company is going to report. And truthfully, I think even if you knew what the company was going to report, it's very difficult to determine what the reaction is going to look like after the report anyway. So I've got no position in Tesla. I'm not going to put on a position in Tesla prior to the earnings report. And it'll just be an interesting one to see how it reacts. Whereas with most of the other Mag 7 stocks, I'm a little bit more bearish going into their earnings reports just from a fundamental thesis perspective. Unless they can really, really blow out those reports, I think that they're going to struggle to move higher.
So when it comes to a stock like Tesla, you say, you don't take any bets heading into these earnings reports. You're not really one to, you're not opening a position, but you're also not really playing like calls and puts either yourself, as I've seen in your trading heading into these kinds of reports. So talk about how you do approach them. Are you really active after hours when it comes to a report like this? Trading the reaction, quick trades, taking on longer positions, etc. after you see what the actual reaction is?
Yeah, very, very rarely, on a couple of occasions, I have taken calls or puts into an earnings report, but that's just a pure gamble as far as I'm concerned, where I know exactly how much I'm risking just in case the idea is wrong. What's much more likely is that I trade the stock after the release actually occurs. I fairly often trade the big cap tech stocks after the reports occur, the evening that it comes out. I tend to do pretty well with the price action immediately after the report. I actually like trading after hours on those reports because they're trading very rapidly, but I find that the price action is pretty clean. You don't have the same degree of algorithmic trading that's occurring after hours, and you have much more human beings that are involved. So I find that the tape tends to trade a lot more pure during those after-hour sessions on earnings reports than it does during the typical trading day. Because a lot of the robots, they don't want to be involved in that earnings report immediately after the report because they could just get completely blown out and their typical strategies don't work in the same way. And then you've got funds that are trying to reposition themselves so that the tape trade's cleaner. And while, and I'm happy to get into this at any point, while I think that tape reading is not as important of a skill for a trader as it used to be, say, 10 plus years ago, one of the occasions in which tape reading really can come into effect and be a strong edge for trading is on an after hours earnings play. So that's a lot of what I'm doing. I do have a strong skill level when it comes to tape reading just because I was brought up in a market 15 years ago when tape reading was an extremely important skill to have. And I'll still implement some of those tape reading skills after hours when I'm watching the stock move and trying to find those natural buyers and sellers in the tape and the level 2 that I can lean on or trade the break of, depending on what the action looks like. And then the other thing that I like to pay attention to is just what the options are pricing in for the report, which I don't know what that number is for Tesla yet. It's something that I typically would check into the close on the day of the report. But very often those levels, if you would want to call them that, from what the options market is pricing in, act as good like pause points for maybe a quick scalp in the opposite direction of a stock as it gets to it. Not always. You got to make sure you manage your risk. There's no 100% in trading, but it's something I really like to pay attention to.
Okay, so before we get into the next Mag 7 name that's reporting, do talk about those tape reading skills that you are using in those after hours trades, because as you mentioned, it's just not a skill set that's as utilized in this type of market. But talk about the difference in after hours trading.
Sure. So part of the reason why tape reading I don't think is as good of a skill as it used to be during normal market hours is because the large orders that are being executed into the market for really big funds are typically now being done by very sophisticated algorithms, and those algorithms are smart. They're designed to be able to get the best price possible without really showing their hand. And it's just very hard to read that, and it can create a lot of noise in the level 2 and the tape during normal trading hours. After hours, like I was just saying, it tends to be a little bit more pure because there's more actual human beings that are involved. So you can see that, large ARCA refreshing seller just stepping down 50 cents or a dollar at a time on the offer immediately after the report has occurred because someone's dumping a long position or heavily shorting the stock. And you can watch that and you can jump in and try to ride that wave down, or you can pay attention as the move becomes very extreme to see when, in this case, that large ARCA refreshing seller actually breaks to be able to then buy the break, because now one of the really big sellers that was driving this thing down isn't there in the same way anymore, and then you can come in on the other side and try to look for like the long scalp on the break of the seller when the stock is sold off very heavily. So that's some of the stuff that I'm looking at after hours.
Yeah. All right. That's great. All right. So the next big Mag 7 name reporting tomorrow afternoon, we have Tesla, but we also are getting Alphabet, or Google, GOOGL is the ticker. There's a look at the charts from the last earnings report heading into today as of earlier this morning. So this is just what the stock's been doing. You said you're a little more bearish on the other Mag 7 names than you are on Tesla. So how are you feeling about, or what is your analysis on Google heading into tomorrow's report?
So Google is also an interesting one because I really like the stock. I really like the company. I really love YouTube. I mean, the way that they've been able to monetize YouTube is just mind-blowingly incredible. I was watching a lot of YouTube last night, and I got the ad version, and it was just, they were feeding me ad after ad after ad. It was really crazy, and I was watching that and just thinking about the Google earnings report and what that's going to turn into. So we'll see how that plays out. Google is actually probably one of my preferred stocks of the Mag 7s at this point, but I just think that the move on these things has been so fast, especially since their last earnings reports. Google, when it last reported in April, immediately traded up to $173 before pulling back over the course of the next 3 days to 163. Off that 163 low, it's gone to 190 and change, and now pulled back a little bit last week. But it's just a really big move. So a lot of the times when stocks have really big moves into earnings reports, a good earnings report is not good enough. An inline earnings report is not enough, or a slight beat might not even be enough, where they then sell the stock off kind of anyway just because expectations were so high and the whisper numbers were even higher than what the average sell-side analyst was forecasting. So you can see those stocks actively sell off. Google and Microsoft in particular, it's going to be interesting to see what revenue from AI looks like, because that's where most of their spend is coming from. These companies are dumping so much money. Meta's another one, dumping so much money into AI. It's obviously been hugely beneficial to the NVIDIAs of the world. But the question is really going to be, what is the monetization of all that spend going to look like? And how long is it going to take for it to come online? And the bear case on AI, if there is a bear case, is that it's just going to take a while to really monetize all that AI investment. And at a certain point, the market for these companies might not like that degree of spend that they're doing. I mean, you can even look at Meta with the metaverse and with their VR goggles and all that stuff that they were spending just billions and billions and billions of dollars on. At a certain point, the market just said, hey, we don't like this degree of spend because the revenue is not coming in from it. And that's when, Mark Zuckerberg realized that, and he announced major cutbacks on the amount of spend that they were doing. And that pretty much then marked the bottom of the stock back in October 2022. And the stock has gone up like 500% since then. It's been an incredible move. But I'm using that as an analogy for really all of these companies that are engaging in very, very heavy AI spend right now. What is the revenue going to look like? And when, in terms of their forward forecasting, are they going to tell us that they're really going to start being compensated for the amount of spend that they're doing? That's going to be the big question, I think, coming into these earnings reports. And my concern is just that amount of spend isn't going to add up to the revenue, at least in the short run, that's going to come from AI, which could create weakness in the stock. With that said, you got to remember what these companies are. These companies have like almost unlimited cash. Their cost for additional cash is extremely cheap compared to a small cap or a mid cap. So if there's any company that's out there that can continue to just spend and spend and spend until they make their own reality where AI actually becomes a thing, it is these companies. And that's exactly what Meta, still using that example, is doing when it comes to their metaverse. They're saying, hey, we are bringing in just so much revenue from Instagram and Facebook advertising. It means nothing to us to just spend billions of dollars on a shot in the dark to see if we can make metaverse and not artificial intelligence, virtual reality become the next big thing. These companies are doing the exact same thing with AI. They can afford to do it, but at a certain point, in the same way that Meta had that big pullback when investors became unhappy, you could see the same thing happen with your Googles and Microsoft. So it's going to be a really interesting report. I broadly like the company. How can you not, between search and YouTube and everything else? But there's a lot of spend that's going on. And then what you could see at a certain point, if we want to broaden this bearish AI view out, which isn't even to say necessarily that I'm a bear on AI, is if investors get fed up with the amount of spend, that means that Google and Microsoft and Meta stop buying those NVIDIA products in the same way. And then at some point you could have an after effect that negatively impacts NVIDIA a little bit further and then pulls those stocks down. And then the final question on all that, and I'll leave it at this point, is if that situation happens, does the money that comes out of these other companies go further into the IWM, to energy companies, to maybe some small caps and mid caps that haven't been able to perform this year, where then you get a continuation of that rotation trade? So that's kind of where my head's at coming into this earnings season, but it's certainly to be seen as they report.
All right. Really great points there on, just everything is connected. All of these companies, work together or, or work. Well, when AI is the theme for one, it's the theme for all. And, there's this trickle down effect of the impact if they decide to shift away from that. All right. So other big earnings that we're getting this week, Tuesday, we'll be getting Coca-Cola in the morning, UPS, GM in the morning, Visa in the afternoon. Wednesday, AT&T, I think it's the morning report. Chipotle is after hours. Ford is after hours. What other earnings reports are you focused on this week as a trader besides just, the Tesla and Google starting off the Mag 7 reports?
So I look at every earnings report that comes out pretty much. So they all, so obviously the Mag 7 ones are the most interesting, but outside of that, they all kind of carry a degree of equal opportunity to me. It's part of my process every morning during earnings season to pretty much review the earnings report of every single company that reported, in conjunction with what their daily chart technicals look like and their after hours technicals, to see if I'm able to come up with some trading opportunity. So earnings season tends to be just a great time generally for the active trader. All the companies that you just listed there will be companies that my team and I will be actively looking at when they report to see what sort of opportunities they can bring. So it's just always an exciting time to be a trader. It's especially exciting right now, actually, because sometimes the macro can be very boring. The big picture technicals can be very boring, and we're in between earnings season and we're just waiting for earnings season to hit so we can find some continued opportunity. This is actually an environment right now where the macro is super exciting. There's a lot of opportunities at the index level to trade. And then at the same time, we're coming into earnings reports, which also create a lot of opportunity to trade. So this has become a really great trading environment really quickly. And that's after I thought June was difficult and boring. July has really kicked off and it's been exciting. There's been so much to do trading the indexes with the IWM QQQ rotation. And then at the same time, we're coming into a period of time where I've got to digest, 50, 100 earnings names in the morning to see, is there opportunity in this stock? Do I like what the daily chart looks like? Is there anything particularly interesting in that report that I think can set this thing up for a big move? So it's just an exciting time.
Hmm. So you say, that was going to be my question. If you're digesting, 50 to 100 earnings reports in the morning, what does your morning routine, look like during earnings season? And what are the kind of tricks that you do yourself as a trader to kind of quickly go through those reports, look at the charts really quickly, and be able to make a decision on if there is or isn't a trade there?
Sure. So first thing I would say is it's not unusual for me to look at 50 names that reported earnings and then really only come up with trading opportunities that I'm excited about in 2 to 5 of them. A good day, it might be 8. A bad day, it might even be less than that. So I think that you really have to do some work to find that kind of perfect matching of an interesting earnings report with an interesting looking daily chart as far as the technicals, and you can see that there's a very clear execution trigger point where you'd be interested in getting involved in the stock. So it certainly takes some time, and earnings season adds to the amount of work, obviously, that I do every morning just with my own research process. So I start very early. I think that good research is the key to good success. I think that a lot of trading success comes from the preparation that you do from trading. And then the trading itself is just about actually executing all of the ideas, all the work that you already put in before the market opened. Most of my best trades actually come from the research that I've done before the market itself even opened. So I start pretty early, especially because I'm both a day trader and a swing trader. So it's not unusual for me to have 20 plus positions overnight. And the first thing I'm doing when I'm waking up and logging in is I'm just seeing how is the market gapping, how are my stocks gapping, how is that affecting the game plan for the positions that I'm having in, and I'm putting in the appropriate bids and offers based on preset game plans that I already have for my opening trading. And people on my team know it's not unusual for me to put out 2 to 400 limit orders into the market for the positions that I'm already in before the market even opens, and that takes me 30 minutes or so. So I spend 30 minutes just taking the game plan that I already have on my swing positions and kind of pumping those orders based on my game plan into the stocks pre-market. It's only after I've done that that I really kick off my research, which I'm a top-down approach trader. I always start with the big picture technicals of the S&P, the NASDAQ, and the Russell before I break it down to the individual stocks. I think that's a very important way to process the market because any individual stock that you're trading is going to have some degree of correlation to the market. So I don't think that you can be an individual stock trader and be blind to what the market is doing. So I first want to have an idea, all right, do I think the market's going to go up or down? And if I think that the market is going to go up, then the opportunities that I'm going to be looking at in individual stocks from a day trading perspective are primarily going to be to the long side because those trades will have a higher probability of success buying those stocks if the market's moving higher than if the market's going down and it's actually breaking lower. So that's the first part of my research is more macro. What is the gap doing to the big picture technicals of the market? What are my expectations based on those big picture technicals of the market? Is there any new macro news that is impacting what those daily technicals actually look like that I should be bringing into my thought process and bringing into my thesis? And then only after that's done do I really dive into the individual stocks. I have a universe of maybe 50 stocks that I look at every day. Some of them I trade pretty much every day. So I go through my normal universe of stocks. And then on top of that, I look at every company that has news, every company that got an analyst upgrade or downgrade, every company that had an earnings report, every company that just had general stock news to see if those names are becoming in play in such a way that it's creating additional trading opportunity, like I was just describing, combining what that news event is with the big picture technicals to see if there's an opportunity. That entire process, doing all that, takes hours. So, if I'm starting at 6 o'clock in the morning, it could be a 3-hour process. Now it's 9 a.m. and I'm doing a morning meeting for my team where I basically present that 3 hours worth of work to my team every day in the form of everything I just described. Guys, this is my expectation from the market today. And then these are the individual stocks I'm looking at what prices and why. And then we have what I call the usual suspects, which is just every morning as a team, we're going to take a quick look at all those Mag 7 stocks. We're going to take a quick look at financials. We're going to take a quick look at energy to see if there's any opportunities that are in there more broadly in our usual suspects, and then obviously with the names that are in play. And then by that point, it's 9:28 in the morning, and we're ready to execute those game plans throughout the trading session.
Great process there. Just a look at like you as a trader and all that you do for the room. We'll have an offer at the end of this for anyone who wants to join you next week for free. So everyone stay tuned for that. All right. So you mentioned some of this. This is the economic calendar this week, just kind of the big economic stuff that's coming out. The big things are, I would say, Thursday, the GDP report, and then Friday, the PCE. That's the Fed's preferred inflation gauge. Kind of how are you not positioning yourself, but how are you looking at these numbers that are coming up and kind of expecting maybe the market to react or hoping the market might react for your own trading, et cetera?
Sure. So whenever you're looking at whether it's an earnings report or you're looking at the economic calendar here with the numbers that are going to come out, it's about how the numbers look versus expectations, and then understanding the macro narrative that's around those economic numbers. For most of this year, that macro narrative for the economy was that bad economic news, as long as it wasn't too bad economic news was bullish for the market, because bad economic news meant that inflation is probably moving down and that the Fed can cut, and the market wants the Fed to cut. So when the economy indicated that it would slow down, the market would move higher. That actually started to change in June. There was a big shift in how this market was processing news in June, where we have moved a little bit more towards an environment where good economic news is good again and bad economic news is bad. And that's especially true after the CPI that we just had on Thursday, where inflation has come down to a point where there's pretty much the market's pricing in pretty much a 100% probability of a cut by September, and is even at this point pricing in a small chance of a cut for July. It would not be my expectation that we cut in July, but the argument there is that the Fed won't want to do a cut in September so close to the election because they don't want to be accused of influencing the election. So maybe they actually jump forward and do it in July instead of September. We'll see. I still think that September is the more probable bet. But now that the market's pretty much all fully pricing in that these cuts are going to continue, what they want to see is that, okay, we want to see inflation stay low. That's good economic news if the PCE number, if the and CPI numbers moving forward continue to come in weak. But the Goldilocks situation, as the market maintains, the economy, I should say, maintains its strength as that CPI and as that inflation number stays low. So now we're at a point where markets don't want to see an economic slowdown anymore. They want to see that this economy can hold in, but we want our cake and eat it too. We want to see that the economy is going to hold in, but we also want to see that these cuts are going to happen, which is currently the expectation. So we'll see what that GDP number looks like. I usually do my research on those numbers the day of, but I think that the GDP expectation number is like 1.9%. So it's still a pretty healthy economy that we've been in from a GDP growth perspective. But we'll see if there's any surprises, because it's surprises that move markets more than anything. If there's a big beat or a big miss, that's the surprise that creates the bigger movements than an inline number. But broadly, I would say an inline number, my guesstimate would be that we move higher on an inline GDP. We move higher on a slight beat on GDP. There is a situation where the beat is so big that we actually sell off on it because the market then gets worried about inflation again. And a miss is also a potential sell-off. So it's like good news is good news as long as it's not really, really, really good, because then it indicates that inflation's waking up again. So a little tricky.
Yeah. All right. So for everyone who's with us live, if you want to work with Derrick, you want to benefit from those, hours of research that he does every single morning, you can go to t3live.com/do live. Again, that's t3live.com/do live. And he's hosting an open house in his trading room next week. So You can trade with Derrick for Monday through Friday next week. It's a big week. I was looking at the earnings calendar. Microsoft is on the earnings calendar. Starbucks is on the earnings calendar. Who else is reporting next week? Meta's reporting on Wednesday. Apple's reporting on Thursday. Intel, lots of big names reporting. So this will be an exciting week there in the ProDesk virtual trading floor. So again, that's t3live.com/DO live for anyone who would like to trade with Derrick and his team. The team there in the room is a bunch of professional traders, not just Derrick, but a lot of other professional traders. Kind of let everyone know what they can expect in the room, Derrick, if they join you guys for your open house next week.
Sure. So you'll be joining a great team of professionals. It's I think, an exciting opportunity to be able to learn a lot about how markets function and how traders position themselves around market movements based on risk, reward, and probability of success. So we typically start getting research in the virtual trading floor every morning by 7:30 a.m. That's a great resource. 9 a.m. we do a team morning meeting that I was just describing, where I kind of present my game plan, but it's also an opportunity for the traders on the team to bring up any symbols or ask any questions that they want to be reviewed. 9:30 to 4, we're obviously trading. It's also an opportunity to ask questions about positions that you might be in as a trader if you want feedback on those positions, or to ask me, questions about the positions that I'm in, or the other traders, questions about positions that they're in, so that you can learn from that. We do a lot of our training and development education after the market closes every day. So 10 after 4 Eastern time, we do our afternoon meeting. That afternoon meeting is basically an educational review of what the market did that day. I am digesting the market moves based on our expectations that we had established in the morning meeting, and kind of reviewing everything that happened there. So that's really educational. And then every single afternoon meeting ends with a team Q&A. And that's an opportunity for any trader on the team to ask any trading related questions that they may have. And we spend as long as necessary every evening answering all those questions. It could be as specific as, hey, Derrick, I bought Apple at 10:35 a.m. this morning with this stop loss and this game plan. Can we review it for feedback? To broader questions on market psychology, risk management, reward maximization, whatever it is. It's in those afternoon meetings and that team Q&A that we get a lot of our work done that helps us grow as traders. So it's a great opportunity for people to check us out if they never have before. And, I think it'll be a great opportunity to learn.
Yeah, I agree. All right. So again, everyone, that's t3live.com/DO live to trade with Derrick and his team for free all next week. It'll be an exciting week in the room, exciting week in the market, I think. All right, Derrick, I'm going to let you get back to trading. Again, everyone, Derrick is a real trader, trading every single day. So we're going to let him get back to that. Thanks, everyone, for joining us live, and we will be back here next Monday. Have a great rest of your trading day, Derrick, and everyone else.
Thanks for having me. See you next time.
All right, bye.